Welcome back, everybody, to Uncle Charters' YouTube channel, where we do technical analysis, especially on the SPY. If that sounds good to you, definitely hit that like button, hit the subscribe button, and turn on the notification. I'll be so grateful if you do. All right, so let's get into this. This is gonna be on yesterday's price action and technical analysis. Okay, Saturday, but I'll be talking a little bit about Friday's action. But here is the flow sentiment. Bearish, filtered for 500k premiums or above, 97% in the puts. And you can see at the end of the day, towards the end of the day, or in power hour, you see millions of dollars worth just coming in the puts. All right, especially, and continue seeing a lot of puts coming in for the July 15th date still. Also seeing a lot of aggressive plays, weeklies, June 17 here. But yeah, very overall bearish. Okay, moving on to my Discord. I usually write my plans on my Discord, my plans for the day, especially for the SPY, very early, before 8 a.m. And I wrote it here around 7:42 a.m. yesterday, but after CPI coming out, the SPY dropped a great amount, so I had to revise my plan. And yesterday's plan, I put SPY currently around 395-ish now. So first resistance is 398. That 398 was based on my multi-year trend line. And I will look for calls if that clears. Okay, remember, my strategy is simple. When a resistance clears, I look for calls. When a support fails, I look for puts. Next support is now at 394. I will look for puts if that fails. Okay, now, two ways I usually enter. I'll enter on the breakdown or the breakout, or I'll use the back test and go strategy. If you want to know more about the back test and go strategy, I made a video about it. Check out the link in the description. Now, as far as buying the breakout or the breakdown, they're more, I guess you could say, higher risk. So it depends on your risk tolerance, if that's your style of entry. But you also have to remember there's a risk there. And no strategy or no entry is 100%. So you always gotta be willing to take the risk, and more importantly, be willing to cut your loss if you're wrong. Okay, that's just part of the job. It's part of the business. It's part of the game. Okay, there's no 100% sure way to enter, but every now and then Uncle Charters does get lucky. All right, the plan was to enter puts on the breakdown 394. Now this blue line, I'll change it to green. This green line right there, okay? That was my 394 level. And that's where I entered a put, entered on the breakdown. It wasn't perfect. I probably got in around 393.7-ish or 8-ish, around there. And it worked out very well. I played it down. Remember, level to level, okay? This red line, I'll change it to yellow, okay? This yellow line here was my next support below 391. And then 389.5 to 390. So it was a cluster of supports. Like, they're pretty close by to each other. Okay? But I played it level to level. Okay? Took some profit around 391 because that was one of my levels. Took a little more. And then I left a runner, actually. Okay? So I took most profits around 391. And I left the runner. Okay? It did get down low to around 390-ish. But then that small runner got stopped out when 391 was recaptured. Okay, so I was able to play a nice move down from 394 down to 391-ish for about a $3 move, which is not bad. Most of the big move happened in pre-market. That was unfortunate. We couldn't catch it, but was able to catch a nice $3 move. Now, because we were below 394, I didn't want to play both sides. I didn't want to play the bull side and the bear side, because you can make money both ways. But because we were below 394, I decided to just play one side and play the bear side. So after getting stopped out, what I was looking for next was the breakdown of my support level around 390-ish. And as you can see, all we got were bounces all day from that 390 zone. All right. I even admit there was a few recaptures, but they were false recaptures of the 391 level, as you can see here. But towards the end of the day, it did recapture right here on that 115 candle, back tested as a support on the very next candle to confirm more upside, and it continued moving its way up back to back test the 394 level as a resistance. So keep the back test and go strategy in mind. And then from there, it just rejected. A nice rejection. That pretty much is confirming more downside, that the 394 zone is a tough resistance because we broke it down, back tested as a resistance to confirm more downside and pushed it back down. Okay, still did not break my 389.5 to 390 zone, but that 394 level held, and that is bearish price action. Okay, so because I only played one side, I missed this whole move to the upside. Okay, and towards the end of the day, I was tired. I was like, you know what, less than an hour left, it's risky. I didn't even play this backtest strategy, but I know a bunch of my members did, and that's what's most important to me, because I want to help people make money. But that's what trading is about. It's not perfect, it's not 100%. Okay, but my job as a trader is not to catch every single move. It is to catch a move, a piece of that action, make my profits, leave a runner in case the market want to bless me with a home run, and end my day green. Okay, I don't really chase home runs, I just go for base hits, and I do that as often as I can. That's my style, level to level. Okay, guys, so that was pretty much my trading day. It wasn't it was a good trading day. Very grateful for it. Now we're gonna move on. This is the daily chart, and the one core pattern that I've been talking to you guys about all week last week was that flag pattern on the daily chart. And I said multiple times, if it breaks down, that's very bearish, because the market does one of two things. It'll either trend or consolidate to build strength for the next trend. Okay, they go vice versa. Okay, the trend leads us to basing, the basing leads to trend, the trend leads back to basing. The market cycles through those all the time. And I said many times, if we get the breakdown, okay, because this was a nice basin, choppy, market makers are the one that was setting this up. So we said if we get that breakout or breakdown, we got to be open to both scenarios. It's going to be a nice big move. And if you go back and watch Thursday's video, this was a nice strategy or call out or trade idea in my Discord. Except I think I was calling and learned it from 408.5. But 407 was definitely a good level when we broke down from the flag pattern. So I'm not surprised to see this drop. Okay, now what is a little surprising, though, not gonna lie, is how we lost the multi-year trend line so quickly. Okay, so we're gonna go to the weekly chart here, and you can see that the multi-year trend line, that's the orange line. I'll go back so you guys can see how. All right, multi-year trend line had a lot of tests as resistance and supports. All right, like 2 weeks ago, I mentioned if we can recapture that multi-year trend line, that will be a false breakdown and it could trigger some upside. Well, I wasn't wrong, but I wasn't completely right either, because when we did recapture this multi-year trend line, at the time it was around 397. It did squeeze as high as around 417.44. It did go up to 418.4ish, 0.5ish in the aftermarket in one of the trading days. But, officially, trading hours, it went as high as 417.44. All the way from that 397. So that was not a bad move, okay? And it was technically a recapture, a false breakdown setup. However, look what happened. We lost that level again, okay? Now, I spoke to you guys about bear trends in the past. And one of the first things we always look out for, that the previous bear trends have showed us, is that when it recaptures, starting from the top of when the bear trend started to where the bear trend ended, they usually recapture from the 2008 bear trend, the September 2020 bear trend, the March 2020 bear trend. Every time when they recaptured the 23.6 retracement level, that was a sign that a bottom was in. Okay, so looking at this downtrend that we have recently since January, our 23.6 retracement level was at 403.92, and we lost that level. So that tells me, the price, to me, the way I interpret it is, the price action is telling me, hey, Uncle Charters, the bottom is not in. Okay, guys? Got a strong breakdown of that bear flag that we talked, bull flag. Just because it's a bull flag don't mean it's guaranteed to break out. It can still break down. In this case, it broke down. Lost that 23.6 retracement level. Lost the multi-year trend line once again. Okay, that's a false recapture. You can also call it a false breakout. False breakouts / false recaptures are very bearish. It shows the market makers just simply trying to trick us out. Over here, they was tricking the bears out. Now it's time for the bulls to feel the pain. All right, and losing these levels tells me that the bear trend rally or the relief rally is possibly coming to an end, and we are heading down lower. Okay, so the big levels that I'm watching, the big critical levels, obviously that multi-year trend line at 398 and that 23.6 retracement level around 43.92. There are other support and resistance levels that I'm watching in between these levels and a little above it. Okay, like that 394 level, of course. Right? But as long as we are below these critical levels, all right? So as long as we're below, starting with 398, if we clear 398, I favor a test of 43.92. But as long as we are below these levels, meaning the price action cannot exceed 403.92. It cannot get above it. Even if it goes back, it goes and back tested as a resistance. We want to see an instant rejection. And as long as that's happening, I favor more downside, okay? I'm bearish. Bulls are not in control. Bears are in control right now. With the next critical support, I have support around 390 to 380, 390 to 389.5. I have around 387ish. I have around 385ish. These are around previous support lows. And then of course I have around 383. What is that? That's about 383.7. That's the support of this bull flag. And below that, around 380 to 381 zone. And of course, more downside. If that fails, I think I got around 376 and 372. I'll have to check it later. But the point is, I cannot be bullish unless we can recapture one of these critical resistant levels. 308 and 43.92. It's possible that we can get a back test of these levels as resistance. If I was a market maker and I don't want to make it that easy on the retail traders, you know, that's a nice push to the upside, and it will probably confuse a lot of retail traders like us who may not be well versed in technical analysis and stuff. So if it does push it back up, you know, that could be a nice bull trap. All right, even if it does recapture the multi-year trend line and and go test the 43.92, 23.6 retracement level, that could be a very nice bull trap. You know, back test those levels as resistant before we head down lower. That's a possibility. Okay? You got to remember, I don't do forecasts. I don't do predictions. I make trades. And I just give you guys the levels and resistance, the support resistant levels, so that you can watch out for the different scenarios. That's the job of a trader. That's the real job of a trader, in my opinion. Okay? Is to react in real time. All right? Not be stuck to some price path. Because, you know, there's nothing wrong with having a bear lean or a bull lean, because I do that sometimes. Like right now, I am leaning bearish. Okay? But a real trader, like a good trader, you got to have a plan for any scenario, especially if you're a day trader. This is what I post on the Discord every day, every single day, you know, as consistently as I can, you know. So, yeah, that's how I feel right now about the SPY. I am bear biased. Cannot get bullish unless we recapture 398 and 43.92. Those are the critical levels I want you guys to watch for. As a matter of fact, you know, they might be good levels to try and short from. Okay, you still got to respect your stop loss. Okay, and the reason why I'm talking about about these levels that they might get back tests as a resistance, because it happens a lot. It happens a lot. It doesn't always happen, but it happens a lot. Okay, it doesn't mean it's bullish. It just means it's trying to give us that confirmation of more downside. Okay, so like I said, as long as we're below 398, I am bearish. All right, definitely could possibly test the support of that bull flag or possibly break it down. If we break down 380, we're talking about the multi-year trend line. We talked about the bull flag. We talked about the 23.6 retracement. But look at this massive bull flag, this yellow one. Critical support for that level is at 383.75. That's another breakdown if we lose that level. Okay? So and if the downtrend continues, the previous low was around 380.54. So in theory, we should get an even lower low. Okay, guys? So remember, always be nimble. Just follow the price action. Remember I said with this bear, this bull flag here, we don't even have to predict where it's gonna go. We just gotta wait for the breakout or the breakdown. And when it finally broke up down, it was a nice quick move to the downside. Okay, that's the power of technical analysis. This broke down what, Thursday afternoon. So while everybody was waiting on the news and CPI, technical analysis traders, we already caught the move to the downside. Just go check my Thursday video where we talked about it. All right, guys, not trying to show off. Forgive me if I sound like I'm cocky. I'm just, my biggest flex is being able to help others. So I'm just excited, for everything that's playing out, So hopefully, everything went well. But here's the VIX. Shout out to the viewer that brought up the falling wedge pattern on the VIX, because I was looking at other things. It's like, think of my support resistance level. You can consider them as channels, and I just play the breakout or the breakdown of the channels. But looking at these patterns is cool too. The falling wedge, and it worked out very well. It broke out of the falling wedge on June 9th, but it also recaptured my 25.44 resistance level based on the 61.8 retracement level. So a combination of strategies there definitely could help. And even though we got this strong rejection from the 38.2 retracement level at 29.71, VIX was still able to close above the 50% retracement level at 27.57. That's bullish. Okay, so obviously that's now support, and it needs to hold for more upside. If the VIX can finally break out of 29.71 again, could break out of this downtrend line, this white downtrend line I got that connect previous highs, that's around 30.10. Okay, that's breakout level. Very bullish if the VIX does that. Okay, remember, I like to use the VIX to help me gauge SPY's price action. And if VIX continues to be bullish, obviously there's a high chance that the SPY will continue to be bearish. Okay, let's take a look at Tesla real quick. I talked about this inverse head and shoulder pattern, which is supposed to be a bullish pattern. Even though short-term wise, that Tesla's not looking, including, medium-term wise, because we are technically in a downtrend, okay? But shorter-term wise, it doesn't look very bullish at all. But I do want to acknowledge that this inverse head and shoulder is still in play, okay? All right. Now, for it to be canceled, we need to take out that 682 level. Tesla got very close to testing it yesterday. You can see that with the yellow lining. That's based on a previous low back on May 12th. That would be the left shoulder. Here would be the head. The right shoulder is still developing here, guys. For me to not even consider this pattern no more, I need to see that 682 level fail. I know there's some people that's hoping that happens, and it's fine with me. I don't care if it goes up or down. Like I always say, I just want to be able to catch a piece of the action. So I would definitely look for puts if 682 fails. We do have a resistant level around 701. Clear, like I said, clearing resistant levels is bullish. But the big resistant level that I'm looking at or been looking at is the 645, 646.5 range. We can clear that. We tested 765 a couple of days ago, but if we clear 745, 746 range, put that back in play, and we'll definitely be bullish if we can clear that. I would favor we get back above 800. Okay, so just watch if we can clear resistance. 701, I think got something around some levels around 718ish, 719ish, 727. Then above that 745, 746.5 zone. Okay. Bearish below 682. Does that make sense, guys? I hope that makes sense. And GME, how about little, what do we call this? Meme stocks now? I've been covering this a lot on my Discord. Members, a couple members asked about it, and the setup just looks nice. And I like GME because it respects the fib level so well. Okay, so I got the fib levels from March 29th high down to May 12th low. And as you can see, usually in a downtrend, when we do get relief rallies, the relief rally usually ends around the 50% to 61.8 retracement level. And as you can see, on June 8th, GME, GameStop, did test that 61.8 retracement level around 153.2-ish. Perfect, strong rejection. All right. Lost the 50% retracement level at 138.89 and right down to the next level at 138.2, washed a little bit below it before bouncing. Okay, so something to keep in mind. Yes, you can see we are in a downtrend, and this could be a lower high. All right, so for me to be bullish, first of all, that 38.2 retracement level must continue to hold at 124.50. If it fails, I will look for puts, play it down to 115-ish, then maybe 106.8-ish. If that level fails. If this level holds, higher risk play, you can look for calls and play it up to 138.89. A lower risk play is to wait for that 138.89 level to clear, and then you can play it up, catch the second leg up to 153.2-ish. And in theory, if we get a higher low, it's possible we get a higher high. The higher high could lead us up to around 163 to 163 to around 173-ish, around there, okay, guys? So, all right, guys, that's what I have for you guys today. I hope you guys have an awesome weekend. Have a great weekend, and I'll talk to you all soon. Peace.